I paid off my $175,000 mortgage in the course of 3 years of working in roofing and sales. And nobody told me these 5 things would happen afterward. Number 3 completely changed my relationship with risk forever. 3 years ago, I was staring at a mortgage statement with a balance of $175,000. Today, that mortgage is completely paid off, and my life has changed in ways I'd never expected. I spent 3 intense years in roofing sales on a commission-only income, putting every extra dollar toward my mortgage. I worked through blistering heat waves and freezing winters, knocking on doors when other salespeople gave up. I endured storm seasons, worked weekends, and pushed myself harder than I thought possible. While my friends and coworkers were buying new cars and taking vacations, I was living on the bare minimum and throwing 5-figure commission checks straight at my mortgage principal. Was it worth it? Absolutely, but not for the reasons I thought. Hey everybody, I'm Mike with Roof Money Pro, and I help roofing sales professionals maximize their careers and build wealth. Make sure to hit that subscribe button for updated content. In this video, I'm taking you behind the scenes of what life is actually like after becoming mortgage free through commission sales. The good, the bad, and the completely unexpected. I'll show you the 5 major shifts that happened in my life that nobody talks about, and by the end, you'll understand why paying off a mortgage early through variable income is about so much more than just owning your home outright. But first, let me tell you why most people in commission-based sales never escape the financial roller coaster, even when they're making great money. Here's something shocking. The average salesperson in a commission-based role saves less than 5% of their income, regardless of how much they earn. When I first heard that statistic, I couldn't believe it. How could someone making 6 figures still be living paycheck to paycheck? But after 3 years in the industry, I understand exactly how it happens. Commission sales creates a feast or famine mindset. One month you're flush with cash after closing 3 major contracts, and the next month you might not close anything at all. This income volatility trains you to think short term. You may have witnessed this yourselves with your colleagues. They close a $20,000 commission and immediately reward themselves with a luxury purchase. New truck, Rolex watch, down payment on a vacation property. Their lifestyle would inflate to match their biggest month, not their average month. I call this lifestyle creep, and I've watched countless talented salespeople fall into the commission trap over the years. They'd have fantastic years income-wise, but somehow still carry massive debt and stress about slow seasons. The difference in my approach was treating my commission income like a business rather than a paycheck. I established a baseline salary for myself, just enough to cover basic living expenses, and considered everything above that to be business profit that went straight to my mortgage principal. Those 3 years weren't easy. Roofing sales is physically and emotionally demanding. I was climbing ladders to inspect damage in 100-degree heat. I was knocking on doors during holiday weekends when homeowners were actually home. I was building relationships with insurance adjusters while competitors were taking it easy. There were months when I questioned everything. After a particularly slow February where I only closed a few small jobs, I seriously considered quitting. My bank account was feeling the pressure, and the certainty of a regular paycheck at a 9-to-5 job seemed incredibly appealing. What kept me going was the clarity of my goal. I wasn't just working to make money, I was buying my freedom one commission check at a time. Every time I made a principal payment on my mortgage, I calculated exactly how many days of freedom I had purchased. That mental framing made all the difference. But even with absolute clarity and discipline, I wasn't prepared for how dramatically my life would change in these 5 specific ways once that mortgage was finally paid off. The first major shift was completely unexpected. My relationship with commission-based income transformed overnight. When I had a mortgage, every slow period in sales felt like an emergency. I'd wake up feeling anxious during winter months when roofing sales typically decline. I had a minimum monthly obligation hanging over my head, and if I didn't sell, I didn't eat, and I risked losing my home. The constant pressure affected my sales approach too. I would sometimes push too hard on potential clients, coming across as desperate rather than consultative. We've all heard of commission breath. I take on difficult customers I should have walked away from. I negotiated less effectively because I needed the deal, any deal, to close. Then came the day I made the final payment on my mortgage. I remember submitting the payment online, taking a screenshot, and just staring at it in disbelief. For the first time in my adult life, no bank had a claim on where I lived. What I didn't anticipate was how this would transform my experience of working on commission. Without a mortgage, my monthly expenses dropped to about a third of what they had been. Suddenly, I only needed to close one decent roof per month to cover all of my expenses. This created what I now call sales freedom, the ability to sell from a genuine place of abundance rather than desperation. I started qualifying prospects more carefully, walking away from problematic jobs that would cause headaches later for my production team. I negotiated more confidently because I could genuinely mean it when I said I was willing to pass on the deal if it wasn't right. The psychological impact was profound. The same income volatility that once kept me up at night became almost irrelevant. A slow month wasn't a crisis. It was just a slow month. This mental shift actually made me a better salesperson. Clients can sense desperation, and my new confidence resonated with homeowners making major decisions about their homes. This is also why it's essential to have a fully funded savings account even if you aren't debt-free yet. Cash in the bank means confidence in front of clients. My closing rate increased from about 22% to nearly 45% within those years of paying off my mortgage. I wasn't working more hours or using different techniques. The only thing that changed was my relationship with the outcome of each sales conversation. For anyone in commission sales looking to pay off their mortgage or become debt-free, this mental freedom alone is worth the sacrifice. The ability to work without constant financial pressure changes everything about how you experience your career. The second major shift was specific to the roofing industry, but applies to anyone whose income is affected by factors outside their control. When I was making mortgage payments, I obsessively checked weather forecasts. A rainy month meant fewer opportunities to inspect roofs, fewer visible leaks for homeowners to notice, and ultimately fewer sales. A hailstorm in my territory could mean a windfall of business. My financial well-being was directly tied to weather patterns I couldn't control. This created a bizarre emotional relationship with weather. I'd feel excited when storms damaged roofs in my area, then guilty for essentially celebrating other people's misfortune. I'd feel personally victimized by extended periods of mild weather when homeowners weren't thinking about their roofs. About 2 months after paying off my mortgage, we experienced the longest dry spell in our region's recorded history. 7 weeks without significant rain during what should have been our wet season. My colleagues were panicking, taking out loans, and maxing out credit cards just to stay afloat. I noticed something strange in myself. I wasn't stressed. I was using the slow period to improve my sales skills, reorganize my approach, and even take a short staycation. Without a mortgage payment looming, the dry spell became an opportunity rather than a crisis. This shift extended beyond weather to all the uncontrollable factors in sales. Economic fluctuations, supply chain issues, policy changes from insurance companies. I still monitored these factors, but they no longer controlled my emotional state. This newfound calmness made me more resilient. When a major supplier increased prices by 8% overnight due to tariffs, I had the financial flexibility and confidence to conduct business as usual with homeowners, while I'm sure many competitors tried to absorb the hit on their margins while keeping their pricing the same. If you're in any profession where external factors influence your income, whether it's weather for roofers, market conditions for realtors, or economic trends for financial advisors, eliminating your mortgage creates a buffer between those factors and your peace of mind. It's like having an emotional insurance policy against circumstances you can't control. The third shift was the most profound. How I approach risk in my career and personal finance. When you're carrying around a mortgage and working on commission, taking additional risks feels impossible. Each decision is filtered through the lens of, but what if it doesn't work out and I can't make my mortgage payment? This fear keeps many salespeople stuck in a comfortable but limiting patterns. For 3 years, I played it relatively safe. I focused on residential roofing in established neighborhoods, offering primarily shingle re-roofs, because that's what I knew would pay the bills. The idea of creating a completely separate business in my off time that would make an impact on the roofing industry was a pipe dream. Now, though, I can focus on providing content, systems, and processes to help other people make the most of their roofing career, whether they're a veteran or just starting out. Now I can comfortably handle both ventures without any added stress. The psychology behind this shift is fascinating. Eliminating major fixed expenses fundamentally changes risk perception. Without the constant drain of mortgage payments, your brain processes opportunity differently, seeing potential upside more clearly rather than focusing primarily on what could go wrong. This new relationship with risk extended beyond my sales approach to my broader financial strategy. With no mortgage, I established a system where 60% of my commission income goes into funding future investments that will generate passive income through months when sales are slower. The most surprising aspect of this risk transformation was how it affected my client relationships. When you're desperate to make mortgage payments, you're afraid to risk any client relationship, even toxic ones. After paying off my mortgage, I became willing to fire problematic clients, something I never would have considered before. Last year, I ended a relationship with a property management company that consistently delayed payments and made unreasonable demands. This would have been unthinkable during my mortgage years. Surprisingly, setting this boundary enhanced my reputation. Word spread that I valued quality and fair treatment, attracting better clients who respected my expertise. For anyone in commission sales working to pay off their mortgage, this eventual freedom to take calculated risks might be the most valuable outcome of your sacrifice. The fourth major shift happened in how I manage my finances through the natural cycles of roofing sales. In the roofing industry and most commission-based sales roles, income fluctuates dramatically throughout the year. For me, summer months could bring in 3 to 5 times what I'd earned during winter. Before paying off my mortgage, these fluctuations were a constant source of stress. During boom periods, there was always the pressure to save enough to cover the lean months while also making extra mortgage payments. During slow seasons, I'd watch my savings dwindle, constantly calculating whether I'd make it to spring without having to bust out the credit card to survive. This feast or famine cycle affects nearly everyone in commission sales. It's no surprise that as many as 76% of commission salespeople report high financial stress due to income fluctuations, even when their annual income is well above the national average. After paying off my mortgage, I continued to implement a financial management system that made it possible to make those large monthly payments in the first place. One part of that system is what I call income allocation, effectively becoming my own payroll department. Here's how it works. I established a primary account through which all my weekly commission checks flow. The primary account then pays me the same salary every week, a set percentage, regardless of how much came in that month. I set mine at 25%. During big months, the primary account builds up reserves. During slow months, it draws down those reserves to maintain my consistent income. This system has completely transformed my experience of commission sales. I no longer live in the emotional roller coaster of feast or famine. My lifestyle remains stable year-round, and I make my financial decisions based on my consistent salary rather than my last commission check. What's fascinating is that this approach has actually increased my overall sales performance. When you're not desperate during slow periods or overly confident during booms, you make better business decisions consistently. This past winter, typically our slowest period, I closed more sales than any previous winter. I attribute this directly to the psychological benefits of income stability. I approached each sales conversation with the same confident, consultative energy I bring during peak season. For anyone in commission sales, this ability to smooth out your income is perhaps the most practical benefit of eliminating your mortgage. It transforms commission work from a high-stress gamble to a predictable business model. The fifth shift was mathematical in nature, but its impact has been emotionally profound. Watching my former mortgage payment amount work for me instead of the bank. For years, I sent an average of $8,300 per month to my mortgage provider. My regular payment plus whatever extra I could add from commissions. That's $100,000 per year that was leaving my financial ecosystem. with a significant portion going to interest in the early periods. The month after paying off my mortgage, I considered redirecting that exact amount into investment accounts, primarily index funds, but then decided to pour it into my high yield savings account to be later used for real estate purchases. I still remember checking my investment account after the first quarter and seeing it had increased by nearly $3,200 without me doing anything. After years of writing checks to the bank, watching my money work for me instead was a nice change. Now, these next few years into this investment journey are going to be focused on building my portfolio to generate enough passive income to cover my monthly expenses in full. During slower sales months, this investment income will provide stability that keeps me from having to tap into my emergency reserves. The math behind this shift creates a powerful mortgage freedom multiplier effect. Let's look at the numbers. The $175,000 I paid towards my mortgage in 3 years would have cost me approximately $315,000 over a standard 30-year mortgage term when including interest. By eliminating that debt early and investing the equivalent payments, financial projections show I'll have approximately $1.2 million after 20 years, assuming average market returns, nearly 4 times what I would have paid in mortgage costs. But the psychological impact goes beyond the numbers. There's something uniquely satisfying about redirecting money that once went to debt toward assets that generate return. Each month, when I review my investment performance, I mentally compare it to what I would have sent to that mortgage company. The shift has also changed how I view financial milestones. Reaching zero on my mortgage was just the beginning. Each investment threshold, $50,000, $100,000, $200,000, brings a satisfaction that far exceeds the relief of paying off debt. It's the difference between eliminating a negative and building something positive. If you're in commission sales and working towards mortgage freedom, I encourage you to calculate both sides of this equation. How much interest will you save by paying off your mortgage early? How much could you potentially earn if you invested those same payments afterward? These projections can provide powerful motivation during the difficult stretches of your payoff journey. Now that I've shared these 5 shifts, let's talk about how to prepare for your own transition to mortgage freedom while working in commission-based sales. First, start planning at least 6 months before your final payment. Commission income is unpredictable, so you'll want a clear strategy for those funds once your mortgage is eliminated. I recommend establishing these separate accounts. You can do them in the beginning. A cash reserve account with 3 to 6 months of expenses. A tax reserve account if you're 1099, maybe 25 to 30% of your commission income. An investment account for long-term growth. A business development fund for skills, certifications, and tools that can increase your earning potential. And then a fun account for anything that brings you joy. Limit this to 5% of your income. Second, prepare for the emotional transition. What are you expecting? What are you afraid of? Many salespeople experience a temporary motivation dip after achieving such a significant goal. I certainly was anxious about that, thinking to myself, what next after such a huge accomplishment? Having next level goals already established will help maintain your momentum. Third, find communities and mentors who understand both sales and investing. I found that many traditional financial advisors don't fully grasp the unique challenges of managing commission-based income. Look for advisors or mentors who have experience with variable income streams. If you'd like to explore working with me to develop a game plan, then comment below ready. Fourth, consider working with a tax professional who specializes in self-employed individuals or commission-based compensation. The tax implications of eliminating your mortgage while earning commission can be significant, especially regarding how you structure your business entities and investments afterwards. Finally, celebrate meaningfully but responsibly. Plan a mortgage freedom celebration that honors the magnitude of your achievement without falling back into bad financial habits. For me, this was a weekend getaway to Austin with my sweetheart where we ate like royalty and enjoyed the sights. Significant enough to mark the occasion, but aligned with our ongoing financial goals. The most profound lesson I've learned in the months since becoming mortgage free is this. In commission-based work, true freedom isn't just owning your home outright. It's owning your time and your choices. Paying off $175,000 of mortgage debt through roofing sales forced me to develop discipline, resilience, and strategic thinking that now serve me in every aspect of my life. The same determination that had me knocking on doors during a hailstorm now helps me pursue new business opportunities others are too comfortable to chase. Mortgage freedom transformed roofing sales from something I had to do to something I choose to do. I still work hard and pursue ambitious sales goals, but now it's driven by purpose rather than pressure. I can take on projects that interest me, work with clients I genuinely want to help, and occasionally step away when life demands attention elsewhere. Last winter, I was able to take a week off to attend a Tony Robbins conference with my sweetheart and recharge during the slow season. This summer, I'll be able to take off during our peak season to run marathons out of state without any financial stress. These choices, these expressions of my values, are the true reward of mortgage freedom. If you're still on your mortgage payoff journey while working in commission sales, know that the destination is even better than you imagine, though not for the reasons you might expect. The freedom that comes from eliminating your largest fixed expenses while maintaining variable income goes far beyond the numbers in your bank account. It fundamentally changes your relationship with your work, your clients, and your future. Your journey to mortgage freedom isn't just about owning your home, it's about owning your life. If you found value in this video and hearing my story, hit subscribe to follow my ongoing journey in commission sales without a mortgage and get practical strategies for your own path to financial freedom in sales. Next week, I'll be sharing the exact system I use to turn unpredictable commission checks into stable, predictable income.